All right, I want you to imagine opening your mail once a year, and instead of that standard run-of-the-mill tax bill, your city has sent you an envelope stuffed with actual coupons. But wait, these aren't your typical grocery store discounts. These are coupons with real, face-value monetary worth, and you get to spend them directly on building up your own neighborhood. A brand new park, a footbridge, a playground. You actually get to choose exactly where your share goes. So, what if your tax refund came with a vote? Instead of just handing over your taxes, waving goodbye to that hard-earned cash, and crossing your fingers for the best, you are suddenly the main character of your city's budget. You're holding real euros in your hand that you must actively allocate to local projects. That's the core of the wild idea we're unpacking in today's Explainer, a concept that literally flips traditional public finance completely upside down.
Because think about the public funding problem we're stuck with right now. It's a slow, totally disconnected status quo. You pay your tax, the government spends it, and then years later, maybe you vote in an election on whether you liked the choices they made for you. It's an incredibly indirect, frustrating feedback loop. But contrast that with the proposed system. Talk about immediate, direct ownership. You pay your tax, you get coupons back, and you directly fund exactly what you want to see built in your community.
Which brings us to Section 1, the public funding problem. Why we feel disconnected from our taxes. We really need to understand the root of this disconnect. You're funding this system every single day, right? But because of that massive delay between paying up and actually seeing results, you rarely get to point at a shiny new bridge or a renovated town square and say, hey, that's mine. I chose that. And to understand this, we kind of have to look back at history. Cities have actually tried giving citizens more of a voice before. Back in 1989, Porto Alegre in Brazil pioneered something called participatory budgeting, letting residents vote on how to spend part of the municipal budget. And it was a massive hit. The idea spread like wildfire to thousands of cities globally. But here's the missing piece. Those models still haven't tied your say directly to your actual financial contribution. They don't quite close that psychological loop between the money leaving your paycheck and the concrete being poured down the street. Moving on to Section 2, Groupon for public goods, crowdfunding your neighborhood. So this new proposal doesn't just invent some clunky new bureaucratic nightmare. No, it borrows mechanics from something we all intuitively get, online group deals. It is, quite literally, crowdfunding your own neighborhood. And here's the exact mechanism broken down into 3 beautifully simple steps. Step 1, a chunk of tax revenue, let's say half of what you pay in VAT, comes right back to you as coupons, say 800 euros worth. Step 2, you look at a public menu of proposed projects and pledge those coupons however you want, maybe 500 euros to a park, 300 to a footbridge. And step 3, just like Groupon, a deal only goes through if enough people pledge to hit the required threshold to cover the cost. If the threshold is met, boom, the project is built. And if it's missed, the coupons are safely refunded to you to use on something else. Literally zero risk of wasting your money on a failed project. Now, what's super fascinating here is how this pledge and refund system solves a century-old economic headache known as the coordination problem. See, big public goods are indivisible. As the source material perfectly points out, a bridge is either built or it isn't. There's absolutely no such thing as a 60% finished bridge that you can actually drive on. Usually, everyone just sits around waiting for someone else to commit their money first. But this pledge then confirm system, with its automatic refunds if the minimum isn't met, it completely fixes that hesitation. Section 3, money that expires, the use it or lose it incentive. Now, this brings up an incredibly vital question. What happens if you just take those tax coupons, toss them in your junk drawer, and do absolutely nothing? Well, to answer that, we actually have to travel all the way back to the year 1932, to the small Austrian town of Wurgl. At the time, an economist named Silvio Gesell introduced a totally radical local currency. To stop people from hoarding cash during a really tough economic depression, this currency actually lost 1% of its value every single month unless you paid a small fee to keep it valid. It was literally designed to force money to keep moving through the local economy, and honestly, economists are still studying its success today. The proposal we're exploring today uses that exact same historical trick, but as a clever structural nudge for civic engagement. So instead of punishing cash hoarding, it discourages you from sitting on your civic voice. If you don't participate and just ignore your coupons, their value doesn't just vanish into thin air. Actually, it's designed to flow proportionally into the pledges of your neighbors who did show up to choose. Ignore your coupons, and your neighbors' choices get more powerful. It's a very gentle, use it or lose it nudge toward getting involved. Section 4, designing for fairness. Who gets how much say?
Okay, a very natural objection pops up right about here. If we hand out coupons based on how much tax someone pays, won't wealthy residents just buy up all the influence? Like, won't the richest guy in town just single-handedly fund a gold-plated statue of himself? Well, the system absolutely does not have to be wealth-weighted. Practically speaking, tracking exact individual VAT contributions is a massive headache anyway. So a totally workable version could simply take a fixed share of total VAT revenue, say a clean 50%, and return it as a simple, flat coupon amount to every single registered taxpayer. That automatically makes everyone's civic voice perfectly equal, while the other 50% goes straight to the traditional government budget.
The author of this concept stresses a brilliant point here. The distribution rules are a dial. They're not a hard-coded switch. Communities can openly choose their settings. You could tune the dial to be strictly proportional to tax paid. You could make it flat and equal for everyone, like we just talked about. Or you could even make it regressive, where lower-income taxpayers actually get proportionally more coupons back to boost their influence. The real beauty here is that the city gets to choose its own answer out in the open, rather than having those rules buried invisibly deep in the system's design.
Section 5, not a popularity contest, drawing the line on vital infrastructure. Now, we definitely have to ground this in reality for a second, because let's face it, literally nobody is going to enthusiastically pledge their precious tax coupons to an unglamorous sewer upgrade or a water main. And this perfectly highlights the dividing line between what we vote on and what we don't. On one side, we have lower stakes, preference-driven goods. We're talking parks, playgrounds, footbridges. These are matters of taste where there's no single expert answer, and that's exactly where direct citizen choice with coupons belongs. But on the other side, we have high-stakes technical infrastructure, things like fire suppression and flood systems. These are completely invisible right until they fail. So they are kept safely out of the coupon system and financed the traditional way, heavily weighted toward expert input. We absolutely do not put critical safety up for a popular vote.
Finally, Section 6, testing the waters, starting small and staying honest.
All right, let's look at how we'd actually roll this out in the real world. The source material is super honest here. This isn't some perfect, magically finished system. Any fixed set of tax rules is eventually going to be gamed by clever people finding loopholes. It's just human nature. It will require ongoing adjustments just like any other policy. So the most sensible path forward is to start small. Pilot this with a modest share of one specific tax, like that, on a very limited menu of local projects. And we need to do this because there is real research driving this idea. Giving people a visible say in how taxes get spent can increase both trust in government and their willingness to pay. By testing this hypothesis carefully, we can see if giving people direct visual control actually repairs the fragile state of civic trust we're seeing today. Which brings us to the end of our explainer and to a massive open challenge. The creator of this concept is actively asking economists, city planners, and everyday taxpayers like you and me to poke holes in this. Looking at this radically direct system, this Groupon for public goods, where are the hidden flaws? If you were handed real tax coupons tomorrow to build your neighborhood, what would you fund? And more importantly, where do you think this system ultimately breaks? Think about that the next time you look at your tax bill. Thanks so much for joining me on this deep dive, and I'll catch you in the next explainer.